Okay, great. Welcome everyone back on the Financial Focus Smart Investing, our weekly discussion about investing, trading opportunities, but also macroeconomics. So Zach and Clem, welcome back on the show.
Great to be back.
So where we start, I mean, quite a few things exciting has been happening, especially in the UK, crypto, but there is also the Fed, there is a reaction tax. So, you know, maybe Zach, you lead the conversation today.
Yeah, I think the cost of living crisis, I'm sure everybody's paid their tax now and everything else. You've got the bills, so just pay the gas, water and everything else. I think it's an absolute disaster. You sort of think, well, wouldn't it have been better if these utilities hadn't been privatized and the government just provided you with electricity and gas and water and all that sort of stuff. So that's rather painful. I don't see how people are going to be able to afford all that, and also with the taxes as well. So this government, I think it's, forgetting about Partygate, this government is just looking like it really hasn't got, I don't see how it can last. I really don't see how it can last. And the other thing which Clem will remember is that I think 13 years is about the longest any one government has sort of been in power in total in recent history. You had the Thatcher years, you had the Blair years, and the Labour, this government, I think 13 years it'll be next year. So I just think it's really looking rickety now, and there's got to be a change. There's so many other, the cost of living crisis is really, I think it's going to be worse than the Ukraine thing in the sense that a lot of countries around the world have got protests about that, and I think that's a major problem.
Everybody just got poorer. I mean, all the action to keep COVID under control made the world that much poorer. So everybody's poorer.
Now we're all getting COVID again. So we're, the COVID levels.
Oh, it's baby COVID though. It's baby COVID. I just
baby
had that.
COVID. I like that.
I had that. I had that about 2 weeks ago, and it's you don't want it, but it's not the same as having your face ripped off by the original. And it's definitely baby COVID. This COVID is absolutely nothing like, well, whether it's the jabs I've had, whether the fact I had it a year ago when it was beta, or it was Kent or whatever I had, which nearly put me in the crematorium. But baby COVID, Omicron, it's not even a bad cold. It's a cold you don't want to have, and it's a flu-ish thing that you don't want to get.
So what do you think the outcome is on this tax, inflation, the commodities prices, inflation, food? What do you think where are we heading on that?
Well, the whole world got poorer by about 20% because production didn't occur because people were locked up. And, people destocked, companies destocked, and now they've got to restock, haven't they? And everybody's poorer. That they look at their bank account, maybe it's the same number. But actually, everybody got poorer, so prices go up to offset that, because money was printed to offset all that, and that means prices go up because you got poorer. Prices didn't go up, costs didn't go up. Your wealth went down, because everybody's wealth went down. How much wealth was lost in that period?
So where does historically what's the end game on that?
Well, I mean, it depends if your government is clueless or not, and they'll just smooth it around and say it wasn't us, we didn't do it. So them over there, and this is here and that's that, and it's really, we're trying really hard to make that not happen anymore, and then they'll carry on doing it.
Right, I'm going to jump in, but there is crypto, and the UK government is now welcoming crypto businesses, is pushing for innovation, is trying to capitalize on the fresh blood that is in the country. So that's like a positive side.
The U-turn, they must be desperate. I mean, that's literally clutching at
Embrace, extend, destroy. Embrace, extend, destroy.
Yes.
Okay, let's talk a little bit more about this bold decision that the UK government is making and its new approach towards crypto, because I think that is a subject that got lots of people excited. And also, Zach, talking about that, obviously there will be investors there thinking, oh, maybe we should look at the London listed blockchain company. Maybe there are new IPO in the space that we need to jump on. So it's kind of like a conversation that it could have different reflection. So it's worthwhile to spend sometimes maybe breaking it down.
Well, yeah, but breaking it down is like, the government, if the government says, it's going to the crypto area and NFTs, that's like the last thing you want to do. It's just like your parents liking the same music as you or something like that, or saying that you're wearing the same clothes
anymore.
You see what I mean? It's just like, what the whole point of crypto and all those things was that it was off grid. So I think it's a joke. I mean, maybe Clem can correct me, but I just think it's a joke. I mean, this is what's going to happen. You said it. They were destroyed in the end. So they just allow you. They welcome you into the fold, and then they get you.
Swallow you.
It's like a spider's web or something, or a Venus flytrap. I think is probably what it is.
Oh, God.
So if they're doing it, they think they can tax it. That's basically what it is, isn't it?
Well, governments can tax anything and always have. As I said, in the last one we did, they taxed wig powder because rich people had powdered and wigs, hair powder, and they taxed that so heavily that wigs went out of business. And they used to tax windows. You got a house, how many windows? They tax you by that. So people would brick up their windows, and you can still see, Regency houses with bricked up windows from that period. Governments know how to tax, and they tax absolutely everything.
But I'm going to leave the country. I mean, these days, you can just go somewhere else where there's less tax. Exactly. Yeah, but you were already there. You didn't even like when it was cheap, so when it was a low rate. So now it's just like, I feel like spread betting, and I feel like, doing all the things which don't, and not making any money. I'm just
you can't spread bet these days and not pay tax, because to get any any leverage, you need to say that you're a professional, and professionals can't get around gaming winnings and not pay tax, because if you're a professional, then it's your profession and therefore it's taxable. The no tax on spread betting wins, that's gone.
Oh, well, what can I do? Bet on the horses?
Well, you pay betting tax as you go in, don't you?
Oh God, you can't do it. Yeah, but the thing is, there's no point doing anything. I mean, if you're working and half of it goes away in tax, what's the point of doing it? I mean,
the streets are full at 3 a.m. in London of people wobbling about. It's literally, they haven't got jobs; they can't be bothered.
I'm in that state where I feel I can't be bothered either. I mean, you need a 10x win in whatever you do. I mean, I suppose the real estate, but buying real estate now is good in the sense of you talked about the inflation eroding the value of your debt. So just borrow up to fix your mortgage rate now and borrow short money.
Yeah.
I mean, I just asked today, and they said it was 2.08% mortgage rate, and so just borrow up to the eyeballs, and in 5 years, I suppose if you borrow $500,000 or $1 million, you borrow $1 million, the debt will only be worth only be $500,000.
So you borrow $1 million, you buy yourself a Monet, or a Gauguin or something like that, and then you come back 10 years later and the Gauguin's worth three times that in notional, and the debt is halved in real value. So yes, that's what rich people do. And then they use the Monet as collateral to borrow another $500,000 and do it again.
But doesn't that mean, just getting onto my area, it doesn't mean that the small cap growth area could actually be boosted, because that's where you can get outstanding returns, or like larger than life returns.
Well, that's in crypto too.
Yeah.
That's in crypto. I mean, I'm developing some yield farming things, because I'm probably going to start a hedge fund in a few weeks.
Okay.
And it's a very sorry.
No, I said that's big news. Clem Chambers starting an hedge fund.
Yes. I mean, and it will be a fund, and it will be hedged.
So
as opposed to a one-directional punt fund like a lot of them.
So tell me a little bit more about that. So it's like I'm an old-fashioned investor that is not into crypto, but I want to get exposed to crypto. I want to make some money, and then I can come to you and say, "Here is $1 million. Just do your."
Well, I'm not going to make a financial promotion on YouTube.
No, I'm
okay.
just trying
but let's forget me for a minute and just talk about what a fund would do.
Yeah.
A fund says, it does copper. It's a copper fund, and we do all things copper, and we buy copper mines, and we buy copper bars, and we invest in people that take old wire from Christmas trees and turn it back into raw copper. We do all things copper, and when you invest into that copper fund, you get exposure to copper. Now, copper might go down, and copper might be rubbish, but the whole point is it is uncorrelated with something else you're doing. Yeah. And you don't know whether this copper is going to be good or bad, but it's going to be good or bad, and therefore it's a hedge on what you're doing with in crypto or in tech or a small cap, and you get a diversified portfolio of risk, and your return is a function of the risk that you take on against something that's a benchmark. And that's how smart people who don't want to be worried to death about what's going on in the markets play things. They have a diversified portfolio of risk that is as diversified as possible. And things like hedge funds get involved in areas which are not correlated with others. So you can say, oh, you do a crypto fund. I want exposure to crypto, but I don't want to charge madly and put all my money in and boots in and crypto's going to the moon. It's just a piece of the overall picture. In the same way as Zach's thing that he's putting together, it gets exposure to young and exciting media companies, which obviously have great growth potential.
Yeah. Well, okay. Let us know when he's live.
I like your hedge fund idea. You keep these things secret, Claire.
Well, because at the end of the day,
all the juicy stuff you keep to yourself. You don't tell us.
Look, I'm here underneath my volcano in Monaco. What do you expect, Mr. Bond?
Yes, Mr.
But yeah. So Zach, maybe give us a quick update on your venture. When we are going to see some progress.
Well, I think I don't want to. As Clem is always very sheepish about these things, I'll just say that it is very close now to a listing, and touch wood and everything else. So it won't be long until I'm on the other side. So I think that's been the case for a while, but obviously with the Ukraine and things like that. But it's looking, it's looking good. I'm very happy now, and I think the time it's taken actually has really sort of solidified the strategy and the ideas that we have. So it's actually been a benefit. I don't think I wouldn't have liked to have been listed on February the 24th when they announced about Omicron and that we're all going to die, or on February the 24th when Putin decided to invade Ukraine. So I think now is a much nicer time, and sometimes you have to be careful what you wish for or hope for. So that's quite good. So
do you also think that perhaps this kind of like push from the UK government to embrace more fintech, let's not just say crypto, because it's not just crypto, it's new emerging technology, and supporting the fintech UK industry, do you think that you see like as a positive sign for your company?
I don't. In theory it is. And I hope it is, but I can't remember any government initiative at any time in history which has ended well. They tend to be too late, or they tend to be too late or too expensive, or they don't work. I think there was the private, PFI or whatever it was called, initiative there that was trying to mix public and state funding for ventures. Anything which is government based. I'm really a small state. Okay. I'm a small state person. You need to get entrepreneurs and encourage entrepreneurs to do things. I suppose there's EIS and there's other things like ISAs and stuff like that, which I think are probably the best way of doing it. But I'm just government initiatives, and they're normally window dressing, or they're too. and generally I'm not impressed. You know, just like these things about leveling up and the Northern, what was Powerhouse, and all this sort of rubbish that they come up with. Just a complete, and it is complete rubbish. The main thing is to encourage entrepreneurs rather than, you know, as I said, you know, I wake up this morning and half my money is paid in tax, or my salary or whatever it is, and they're raising taxes. You just think, well, why that? You know, why am I working so hard when a third of it or half of it is paid in tax and is wasted on various things? So not good at all. And then that non-dom thing of Rishi Sunak's wife is also quite sickening. That news today as well. So it's just not. And I'm a conservative. I know Clem tries to be sheepish about these things, but I'm very much a capitalist and a conservative, and that's the only way of generating wealth.
Unless you get a rich granny.
Yeah, well, I think my rich grannies and died decades ago, and they weren't rich, so that was no use either. So there's only one way of creating wealth. It's a small state, low tax, etc., etc. And we've just gone into the worst of both worlds, I think, at the moment. Worst of the left and the worst of the right. So I like the small cap area because it's a bit more. You know, the upside is there. You tend to have the best entrepreneurs there. Obviously, some of the worst as well. I think, you know, as it was April the 6th yesterday, the new ISAs for 2022. You got your 20 grand allowance. I think.
Oh, that's why you're crying. Okay.
So,
oh, April the 5th. Yeah, I forgot about that. I haven't lived in the UK for getting on 40 years now. So yeah.
Corporation tax. You know, I could have bought, you know, a decent car with that. Not that I would waste money on a car, but
go live in Dubai and pay no tax and buy a decent car.
Yeah, but I can't be bothered to drive a car, so that's the other thing. And
can't be bothered to live in Dubai, you mean?
Don't get me onto driving either. So basically, yeah, the government initiatives I'm not a fan of. I hope it does well for crypto. I think the main thing which seems to be could do well for crypto are Russians sending money around the world via crypto, which is obviously not a great thing either. And that's you know, it's ironic.
Don't confuse Putin and his mobsters with Russians. I mean, you know, yeah, I'm sure he's got plenty of Russian supporters and all that, but a lot of Russians have been leaving Russia over the last few weeks, getting out of Dodge. And, you know, because like, oh my God, what have they done? And I'm out of here and just flying anywhere that they can land. Lots and lots of particular middle class and, you know, not rich, wealthy middle class Russians have gone. I'm off. I'm out of here. Goodbye. Getting on a plane. And
I think you're absolutely right, and I think that's the same with anything which has harmed the world. You know, whether it's religion or politics or geopolitics. You know, you can't blame the people for having mad leaders, and that's taken on board. And I think it must be heartbreaking for those. It's heartbreaking for Russians who don't support what's happening at the moment. But the situation with the general, you know, the general way things are done, I think is going to be very, very difficult because of that crisis. So that just made a difficult situation worse.
Okay, so we have been a bit negative. So let's maybe try to kind of spark something for people to kind of be a little bit adventurous. Small caps. What we can look at.
Well, I've just got one before my phone dies. Which is called Ethereum or Ethereum. Can't remember which one it is. And the ticker code there is OSI. And the shares there have been rallying strongly in the last week off the back of it being perceived as a winner from the Russian cyber threat situation. So I think that's that's the one that maybe I'm excited or interested in at the moment.
Okay.
Well, that's Zach's phone going, Zach. I personally am quite excited by big caps out there in the FTSE 100 because, you know, there's a lot of yield there, just huge amounts of dividend paying. Now, that's not very exciting for a lot of people. But if you can buy a company which is, has fallen a long way. Oh, there's your OSI. Okay.
Yeah, that's just to see. Always Zach pick at the one they just gone up. Either it was the lucky. Anyway, okay, so that's OSI. Let's go back.
And I think companies like Imperial Brands, which is tobacco, has I think it's monstrous dividend of 8%. It's having a change of the guard on the board, and it's making good progress. And it's come down from IMB, but put 5 years on there. Put it on 5 years. I like always to see the big picture. You see, so that is the big picture, and you can see that everybody has hated it for a long time. It's come down from 40. If you can squeeze the year axis down a bit, Steffi, if you go move, you can do that as well. That works. But if you just grab the where it says 2018, and you can, there you go, and now you can see the rest of the history. So you can see, and for a long period it was in fashion, and then suddenly market says, I don't like you. We don't like your company.
What do they do, Imperial Brands? Sorry, my ignorance.
Cigars and cigarettes and tobaccos.
Tobaccos. Okay.
It's an international tobacco company, and and everybody, the City of London hated it, and it's come down, and now it's done its base, and now it's climbing back. So you can see it goes through long periods of being in fashion, and then it's gone for a long
20
period.
years in fashion.
Yeah, exactly. And then it's got out of fashion. I think the City didn't like the board, didn't like the people running it, didn't think much of them, and there's been a change there, and now it's going to grind up. And if it grinds up, if it doubles, it will be paying a dividend that is normal for the FTSE, which is 4%.
So it's not paying a dividend right now.
It is. It's paying 8% dividend.
Okay.
So if you click on financials, there, boom. And if you scroll down a bit, so you see dividend 8.3, and it's on a PE ratio of 5. So you could basically say that's half price. That's a stock that is selling at half its what it should be. If it was a generic, nobody even they just I don't even know what you do, but I'm going to buy something. The FTSE 100, a FTSE 100 company should have a 10 to 15 PE, which is 2 to 3 times higher than this one's got. So should be paying a 2 to 4% dividend, and this one's paying 8. So
let's use this as an example, just to clarify the PE variable for people when.
Let me explain what that kind of is.
Yeah.
So the best way to look at PE is how many years worth of profits does it take for me to buy the whole company?
Okay.
Yeah. So if I borrowed 15 billion, from Mr. McBank, how many years of profit would I have to collect up to pay the bank back?
5 years.
So 5.5, 5.5 years. So it will earn, price to earnings. It will earn all its value in 5.5 years. So you could buy the company in 5 years. Yeah. So if you imagine I'm a private equity guy, I can go and I can buy that company. I can borrow the money at 3%. So I can borrow my 15 billion at 3%, and I can pay for it out of profits over 5 years. I mean, who wouldn't do that? And that's what private equity does. That's what they do for a living. And
so
that's one of the reasons these companies suddenly get taken over.
Is because he's paying 8%.
Well, you don't have to pay it to have a PE ratio. So you could be just stacking the cash up in the company's bank account, but they pay out 8% of the value of the business.
So you pay your interest on the money that you borrow.
Well, if I was a private equity guy, I'd go in there and say, I'm buying your company for 15.8 billion. Thank you very much. And then I would, I haven't borrowed it from, bank. And then I sit there and I get all that dividend. Yeah. And I've at the end of it, I'll actually be able to pay 15.8 billion over in just about 6 years back to the bank. So they're charging me a couple of % on the money. So I'm actually, I've just made myself a billionaire for just being able to pull that off.
Yeah. Okay.
Yeah, because you can borrow money at 2, 3, or 4%. Yeah. You're getting 4%. You're getting 8% dividend. So there's your interest paid.
Yeah.
And you're getting 4%. Yeah. You're getting 4%. And then if you're paying the bank 4% of its money back every year, is that they're happy as Larry. They'll let you do that forever.
Yeah. Okay. I think that was interesting. Okay. Imperial Brands one. Do you have any others?
Well, you see, this is not an income stock, but I've got to say I'm really, really interested in Enquest. And yeah. I own these stocks. I own quite a big chunk. There you go. And they've just put out a bond. I don't do bonds. I don't like them. But they're just issuing a bond that pays a 9% yield. So a 9% coupon on a bond for their business. Now, these guys are a big chunk of North Sea oil. And of course, you know, once upon a time in the era of, oh, you know, let's build some more windmills and let's get cheap gas from Mr. Putin. Obviously, they weren't very fashionable. But now everyone's going to be, you know, really, really scared about energy security.
Yeah.
And Britain has no gas problem, has no energy security problem because it's got the North Sea.
Yeah.
But if they shut the North Sea down like they were going to, and oh no, we're not going to explore any more of these fields. They've got naughty carbon in them. Oh no, leave them alone. No, we don't need any of that. We need more windmills. And you know, it's gone from that we don't want any hydrocarbons to, oh my God, if we don't have any hydrocarbons, we're in deep trouble. I mean, imagine the situation when your country is running on windmill power, and you have a little war. Windmills are not exactly difficult targets now, are they? So they could just come in and take out all your electricity, and then where are you going to be? So if you think about energy security, oh, I'm going to have a Tesla tank, and I'm going to get 150 kilometers down before I run out of batteries. You know, you want tanks that are going to have to burn hydrocarbons. You want aeroplanes; they're not going to be electric, are they? Etc. 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 So all of a sudden, the hydrocarbons go from being the worst thing on earth to being something you absolutely must have if you're going to be secure. Yeah. And Mr. Putin has shown quite clearly, you ain't got hydrocarbons, you are in a pickle, as Germany is right now, because all these left-wing thinkers got the Germans to shut down their nuclear power, played straight into Mr. Putin's game plan, right?
Yeah.
So energy security is now a big hairy deal.
Yeah. I mean,
if you ain't got energy, you are in a bad place. And this is North Sea oil, which was a pariah only 3 years ago.
Okay.
And it's now going to be, you know, a hero, from zero to hero.
Okay. Yeah. Well, we see from 20 to 32. That's quite in just a couple of months.
Yeah. Put 5 years on that, Steffi, because then you get to see the whole story. You get to see the saga of these things.
Yeah. It's a sideways. Yeah. It's more.
Yeah.
It's
but you can see that it's, you know, it's a 40p stock.
Yeah. I mean, for me, that are, you know, I'm not an analyst. I would say, okay, 5 years it has been up and down, but has been in a range. So it's actually quite a solid company in the sense that it's not gone from a lot to nothing like many others.
Well,
so,
you see, the way I look at things traditionally is it cheap? And if it's cheap, you want to buy it. And then when it's not cheap anymore, you want to sell it. Simple.
The best you will get over 40. That's the best that you can get here.
Well, not at all, because there's this other thing that I used to trade a fair amount, and I every now and again I dip back into that cesspool that is trading. And the thing that traders talk about, which there you go.
That's how I get the big picture. Okay.
And that's when Greta was born, up there in 2014. See? So there was a catalyst there, and the catalyst was, we don't want none of this hydrocarbon. We're all going to, you know, the polar bears are all going to die, and we've all got to go electric and sustainable and all that stuff, right? And then that is new world utopian thinking, and we've been in a utopia for quite some time. Well, Mr. Putin wrecked our utopia. He's wrecked it. You know, look at Dubai. Dubai is a city made of glass. It can't afford any sort of warfare. It's made of glass. Yeah. This modern world is made of glass. And you can't, that's because in a utopia world, yes, you have all the sustainable stuff. Yeah. When you're starving, you end up eating your cat. And that's the two ends of the poles, right? And we've been pushed back away from the wonderful world that we've been living in by a naked aggression from a nationalistic dictator who wants to grab some land for his people.
Yeah.
I mean, we've seen that script. That was the script of 1939.
If people wants the land, because he might just be doing for the sake of achieving something he wants. As you said, not many Russians are backing him yet.
Yeah, well, I mean, I'm sure lots are, and lots aren't. But what that is in trader speak is a catalyst. And there was a catalyst there which says, right, all oil is going to go away. I'm sure some of the viewers can remember hearing from people that hydrocarbons, oil was going to be something that was going to become obsolete. No one's going to use it.
Yeah, we remember that. We were talking about that before COVID. That's what it was all about. Forget about oil and gas. It's not in fashion anymore.
Well, that's gone.
Yeah,
that world is over. And we've had that catalyst, and that was the invasion of Ukraine, which means that a company that does oil in the North Sea, when the North Sea was going to be concreted over and forget oil, forget it, you have a catalyst and it falls heavily. Suddenly you get this geopolitical change.
Okay.
You get and then you get it's another catalyst, and it puts it into a totally new investment environment.
So Clem, I'm going to ask you something here, because it just come up to my mind that I see some small cap companies that before they had the project on show somewhere in the world, and then decided to sell those oil and gas assets because they were not material production, or because they thought they were not great enough. And now they are coming back. So assets that I remember in their investment forum, they were talking in 2014, 2013. Now they are back. The company is relaunching its portfolio. And for some, it's kind of like a sweet, fun thing that I would say, if it was not getting traction then, how you can actually think to get traction now. So, I mean, okay. So that is kind of like something that I've been seeing, and it got myself a bit skeptical, because if you're trying to take back all the assets, trying to relaunch it because now it's in fashion, it's the same old assets that was around 10 or 5 years ago. So that's kind of ironic. So what would you say if you see like a company that is doing that? Oh, Clem, speak.
There's the button. Yes, found the button. Companies like that are very, very difficult, because if it's a long-term investment, they don't normally pan out. So if you're looking at small companies which are promoting an idea, a trade, a asset, etc., it's normally that you spotted them early and you go on for the ride and you get off. It's a speculation.
Yeah.
And small speculations are for speculators, and often for small speculators, because it's borderline entertainment rather than an investment. And yes, if you follow them all and all 97 of them on the London market, or 650 of them in America, or 110 in Australia, and you're watching them, well, it's like racehorses. You say, oh, that one's going to run well. Oh, we know that asset. Because let me tell you a story. I got an email from a CEO.
I think you said that it was the same. It was the same.
Same asset as when I was
exactly,
7 years
but
old.
that's why I wanted to bring it up, because you had those experience. Now, if you are seeing a small cap company that was advertising a portfolio 5 years ago, then he let it go, or he sold it, or he relinquished, and now he's coming back. Would you be interested in that company, or would you say no?
Personally, I wouldn't touch things like that with a 10-foot barge pole. Yeah, because there's more than a few reasons why. First of all, is what is the cost of buying it and selling it? Yeah. And these companies have 8 or 9 or 15% spreads, for example, in the UK. So you lose 15% of your money buying it and selling it. For whatever reason you bought it and sold it, you lost 15% of your returns. Well, a stock market return of 7% is considered to be pretty good. So that's 2 years worth of natural return in a stock market. So if you go and you buy this cigar company, which you've been watching for 5 years, it's a big example of that, doing that on the small side. And so you're watching this, and it's got to the stage where you think it's a good buy, and you buy it, and away it goes with a small company, and your costs are minor, 0.1% spread. So whether you got it right or wrong, it doesn't cost you to get in and out. These little stocks, they cost you a lot to get in and out, and that makes it very difficult to make money from them.
Okay. I think that was a good comment. Okay, Clem, I think we ran out of time for today,
Yes.
But thank you so much for bringing back some ideas to the show, and looking forward to have you back next week.
Yeah, see you then.
Thank you. Bye,
Bye-bye.
everybody. Bye.
Bye.